Wonderful good day, ladies and gentlemen. Commodity TV here out of Zurich, Precious Metal Summit 2015. And as you know, we are not only interviewing companies, we also want to get the opinion of some good fund managers. And I'm very happy and proud that I have here Ronny Schöferle from Incrementum AG out of Liechtenstein in Vaduz. Ronny, thanks for taking the time.
Thanks a lot, Jochen.
Tough times, not easy. Maybe 2-3 words about your fund and how did you perform this year?
Well, we're doing quite well, and I think on a relative basis, we're doing extremely well. We set up the fund in January 2014. Mining stocks were already down 50%, so we thought, okay, that's really the sweet spot, the perfect timing to set up a new fund which focuses on inflation-sensitive assets. However, since then, we have seen mining stocks taking another beating, down minus 60%, commodities getting hammered, and also energy equities. And that's basically what we're investing in. So we had a hard time. The good thing about it is that during the worst sell-offs, we've been completely out of the market.
So you had 100% cash?
Yeah, at the moment we're...
That's pretty unusual.
Yeah, it is, yeah.
Okay.
So, as you know, I'm not only from Austria, I'm also a very keen follower of the so-called Austrian School of Economics. And I think the Austrian School of Economics has got very different insights when it comes to inflation and deflation, and that's actually what we're focusing on in our fund. So for us, the only thing that really counts is, do we see rising, falling, or neutral inflation? And when we're seeing falling inflation rates, we are completely out of the market. And unfortunately, since we set up the fund, our inflation signal was most of the time on falling inflation rates. So of course, we've got a long bias. We believe in gold. We think that mining equities are a tremendous opportunity at the moment. However, we've been lucky that we set up the fund like that, and we are down now 4%, which is quite okay from my point of view. And we're already preparing, of course, till the inflation signal shows rising inflation rates. But at the moment, there's still massive deflationary pressure.
Okay, so the question would be, what would change the model? What has to happen?
Well, the recipe is secret. Of course, it's like a bit like Coca-Cola. However, we as you probably know, we don't care about government statistics. So all those CPI numbers that are calculated, they're rubbish. They've got nothing to do with actual inflation. What counts for us is the interplay between monetary inflation, asset price inflation, and price inflation. So for us, a very, very accurate indicator, for example, is the gold-silver ratio. When silver outperforms gold, so it means you've got a falling gold-silver ratio. This is usually a very accurate confirmation that inflation is rising and that the bull market in gold is strong. So I think that gold-silver ratio holds a tremendous amount of information. Then we are closely following mining stocks versus the S&P 500. We're taking a look at the growth of different monetary aggregates and so on. So the way we manage our assets is, I think, completely different. And of course, we're trying to anticipate the signal, and at the moment our signal is on neutral, which is quite unusual. So we've got some sort of a barbell strategy. We're hedged for extreme deflation with a very interesting position, and we're also hedged, but only with like 1% of the fund, for strong inflation. But as soon as the model shows us rising inflation, we're gonna start buying into mining stocks.
Okay. Buying into mining stocks, that's the magic word. What mining stocks would you consider for a buy then? I mean, you know, we have exploration, development, production.
Yeah, sure.
So what are your key points?
At the moment, as the signal is neutral, we're doing our homework, so we're running our models. And I think it's interesting to see that quite a lot of the companies that we are following did a tremendous job in cutting their costs. I think many companies really did their homework. So there's lots of positive things happening in the mining space. What we're focusing
You want
on.
to name some of the companies?
I really like, for example, I like from the small producers. I like Mandalay Resources. I think it's a very good company. Of course, we like from the big names. We like Randgold. We like Agnico. But what we're really focusing on are the developers. I think this is kind of the sweet spot when it comes to M&A fantasy. And according to our inflation model, it doesn't show only do we see rising or falling inflation. It also shows you do we see strongly momentum in inflation. And if we're seeing a very strong inflation signal, then we will definitely overweight small silver miners versus large gold caps. So within the model, there's different amplitudes that we can allocate our capital. But if we only got a weak signal, then we will stick for the beginning with the larger caps.
Okay, final question. Do you want to give us a little bit of a prognosis for 2016?
For 2016,
Do you have the courage?
Yeah. No. It's cool. I'm speaking at the Precious Metals Conference in Munich, and there I'm always giving a forecast. So last year's forecasts were pretty accurate. Yeah. Was quite surprised. So, from my point of view, what we can expect going forward is a recession in the US. I cannot rule it out. I think the Federal Reserve will start thinking about implementing negative rates in the US. Would be a very big topic, especially for our fund, as we've got extremely asymmetric positions for that. I don't believe that there's going to be a rate hike in the US, obviously. I think if we should see rising inflation rates based on our model, then the mining equities should do well. But I cannot rule out that there might be some sort of a deflationary crash. We have to follow the Chinese market very closely. So what happened in China is a huge credit bubble. Just to give you one example, the total amount of credit in the last 20 years, it's up by a factor of 54. So, of course, there was solid growth and very healthy developments, but there's also a massive amount of malinvestments, and those malinvestments have to be liquidated in China. So there's this interplay that we call monetary tectonics, this interplay between deflation and inflation. It's getting stronger, so expect more volatility going forward, expect more financial repression, expect more interventions by central bankers and politicians. Those are all not very good things, but that's the world that we're living in. And I think if really inflation will become a topic, and the whole market is scared of deflation, especially central bankers are scared of deflation, sooner or later inflation will become a topic. Then you want to be invested in mining stocks, of course.
And gold and silver, of course.
Of course.
Yeah. Maybe a target for gold and silver?
Well,
Just two numbers?
In my last In Gold We Trust report, I'm publishing it since 2006. Yeah. And in 2006, I said my long-term target is $2,300, but I didn't put a time point on it. And this year we decided that the time will be June 2080 when we expect gold to hit
18 or 18?
18.
Okay. Because 80 under the life.
However, if it's only going to be 2,100 in 2018, I think it will still be pretty fine.
Yeah, absolutely. Great. Ronnie, thank you very much. And I hope we see your target sooner.
Thank you. Thanks, Jochen.
Thank you.
Thanks.
Ladies and gentlemen, that was Ronnie Schöferle from Incrementum out of Liechtenstein, Vaduz. And yeah, finally, we got a good target here, 2,300 in 2018 for gold per ounce in US dollars, of course. And yeah, they have to watch for the inflation, that's for sure. And it's very interesting. His fund is 100% nearly in cash. Which is quite unusual for a mining stocks fund. But as Ronnie said, the the model will change maybe sooner than later, and he will be back investing into the mining stock. So we will see what happens. Thanks for watching us. Bye bye from Zurich.